Today's Monday, March 6th, 2023. Back for a quick review of the opening range session from today. And I'm going to try to make this pretty quick as I'm still recovering from my illness. I kind of am dealing with a cold and a sore throat and a cough that's been lingering. So the more I talk, it's not as good to keep talking. So I'm just going to keep it short. But I've added this new indicator to these when I do these videos, just because I think it'll help visualize what I'm looking at a little bit more clearly. So first thing is we've been bullish after the push up from end of the week last week. Previously, I had been bearish, and I had said, if I turn this off, this is ICT kill zone indicator. I had said that if we had reclaimed this level basically right here, then that would get me to change my view on my bias. Anyway, let's look back at what's going on today. So first things first, we've been bullish, and I took trades on both S&P and NASDAQ today on different accounts. And the first thing I'm looking at is what did the prior sessions do? And we can see Asia, pretty tight range, about 20 points, more or less. And then London was an even tighter consolidation. So I've talked about broadening formations in the past, but this we would call a tightening formation with respect from session to session. So we're seeing a consolidation, and on these days we can look at it like one of two things, where it could either be an AMD, so an accumulation, then a manipulation on one side, and then a distribution the opposite way. So whatever way it first breaks the consolidation, that would be kind of like a Judas swing. Or it can be a continuation profile based on whatever the bias is. So in this case, we've been bullish, and seem more likely that we would be looking for continuation type setups at the open. Now, before 9:30, let's just go out to the 30-minute chart. You can see also we have this new week opening gap that I have marked on the chart that we've kind of first pushed up and then came back, consolidated through, and then pushed up again, respecting it here. And so 15 to 20 minutes before the open, I'm looking at, did we have a liquidity grab? And if I were to do a comparison, we do have divergence with respect to the dollar. So if I look and illustrate on the chart, just to show you the higher lows here, and there's a high low here on Dow. But at the same time, you would expect there to be a lower high on the dollar index, but instead we have a higher high on the dollar. So we're seeing divergence here where the dollar is taking the liquidity above this high and then dropping off. And then at the time of the open, it was, sorry, this time zone is off, but let's change it to New York. You can see that at 9:30, we're down here. So this confirms this as a type 1 liquidity grab for me. And then it becomes, well, where do we look to buy? So at first I thought, okay, maybe we will see a deeper retracement than what we got down to kind of this area again. I think if I go to the hourly, yeah, maybe this down candle could trade into, and this gap again could get another test. But it doesn't have to do that. And so while I was looking to buy down there, I had my limit order set to go down here. I was watching price on the 1-minute chart and saw a couple of things. So at the open, we get this Judas lower, which we were expecting, but it did not go very far. It did not go more than just a few points. And so we have this liquidity grab here, and it was confirmed as a liquidity grab with divergence. So then it pushed up, displaced up. And if I go side by side, you can see here what I'm talking about. So at the open, NASDAQ just shoots up and S&P makes this lower low. So we have the divergence, we have the displacement, and then we look for entry. So first thing I did, let's focus on the positive. I entered here on my futures account, actually right here. Well, let's go chronologically, actually. So first thing I did was I actually entered on NASDAQ. And that was a mistake because sometimes it's good to go with the stronger one. But admittedly, this displacement is better than this one. And here we have this like trend line liquidity, more or less. And it looks a little too clean. And price ended up coming down. Long story short, it took me out. Let's see, where was my stop on this? My entry was kind of close to it down here. And then it was something like this. Target up here. And it had wicked, it had come very close right here to my stop. And I thought it was in the clear, but then it came down again and took me out. But at this point, I noticed we were actually creating a type 2 liquidity grab where we have a liquidity grab of these lows and this low. At the same time, S&P is making a higher low. So I was able to buy S&P here shortly around 950-ish, which is a good time before 10 a.m. to be buying this fair value gap with this divergence. And then this was on my futures account. I did not take this trade on my futures account. I took it on my MT5, my MetaTrader. But once we got this type 2 and we started pushing up, I was able to take another position at half size, so half risk on my MetaTrader here on NASDAQ. And more or less, since it was a half risk, it just basically covered the loss on this trade. And then on S&P, this was just a 2.5 R, so about 11 points or so to target. Now, in retrospect, I think knowing the conditions we're in this bullish environment, I wish I could have held towards the 10:30 time, because that would have just been a logical thing to do, and it would have obviously been a better outcome. But I didn't know Monday if we were just we had been kind of choppy, and so I just didn't know what type of follow through we were going to get on Monday. Maybe we were just going to rally a little bit and then come back down and then retrace into some of the imbalances down here on this move up. It's very possible that you get kind of like a false start Monday and then price comes back down. So 2.5, I think there was also some imbalance on the left. Yeah, so there was, so it was basically this level. I didn't want to push it past that, even though I thought this high could be a drawn liquidity. But you can see, we're showing now, I wouldn't have been in the trade by this point, even if I had aimed for that. But we're coming back down now, it looks like. So that was the trade. Pretty straightforward, just step by step. What I was looking at this morning, just following my plan and trying not to be too active beyond these opening range setups. And again, at the look of this pre-market, this is what I'm seeing before. Let's go right before 9:30. So you can see hopefully more or less the consolidation. And we have this accumulation. And then is this manipulation? Well, in certain environments it is. And so that's the trap. And so, I know what I wanted to show. So the other factor that I was looking at, so this red level, what's this red level? And this is why I was looking at the lower time frame, even though I initially wanted to buy down here a little bit lower, kind of where this breaker is more or less. I wanted to buy down there, but I was watching, clearly we have a fair value gap right here, this blue box right here. Let's make it gray. And so price dipped into it. But what is this red level? Previous week's low, not last week's low, but a previous week's low, which is this low right here. So I'm using that nearby level as a key level. It's just to help give a frame of reference of where we are. And I just like the confluence of the lower time frame displacement with the higher time frame level retest with the divergence at the open. And And that's that. And so if I could do anything over again today, it would have been to obviously avoid this loss. And I think the way to do that was would have been just to be aware of the trend line liquidity right here. And I thought I had escaped it when price came down just to touch this. And now this red level is a previous week's open. Similarly, it's this previous week's open from the week of February 13th. So that was my key level on NASDAQ. It looked like price was holding it, but it just wicked it a little bit further. And looking at that lower time frame, this displacement really wasn't as good as it was on ES. And so the quality of the displacement can be a useful tool in helping to determine which market you want to trade. So at least I was able to mitigate the loss. But it's unfortunate that on my MetaTrader, I wasn't able to have a profitable day on this account. It was just a break even. But it is an important point that these divergences can shift. So you could get one right at the open that shows the divergence, and then you can also get one, as you get into like 20 minutes in before the top of the hour, you can get another liquidity grab. And the same thing happened actually if you were looking back at Friday. Let's take a look at this is the New York Stock Exchange open, more or less right around here. And you can see the market dip down, Judas lower, and you can look at the wicks here. You can see here we get a little divergence. If you just look at these two wicks, this would be on the lower time frame. You'd see lower, and then here it's higher lows. But we get a rally on both, and then you get another divergence again here. So at 10, right around 10, you get that liquidity grab and this higher low on NASDAQ. And so then you just keep, monitoring and look for the displacements, look for the divergences, but only if you have a bias, only if you feel pretty confident in which direction price is going. So that's kind of the lesson from today that I want to take away from it, looking at today and from Friday. All in all, not a bad start to the week, and you can see we're retracing down. So we'll see what we get tomorrow. It's very possible now. Let's go look at the hourly. Do have a point of interest down here. So it wouldn't surprise me if we kind of break lower now and take out the sell side. We've hit some higher time frame liquidity areas. So it took this high on NASDAQ, and so maybe we come all the way down and take the lows here. The rest of the day, I'm not sure. I'm not making any calls here. I'm not going to trade it. I've logged out of my accounts. And so that's it for today. Hope this was a helpful video, and I'll be back again hopefully tomorrow. Take care. Bye.